We had a veteran who was pre-approved and was under contract. Everything was perfectly fine. 2 days prior to closing, the lender calls and says, hey, we can't do this because the veteran is self-employed. The most ridiculous thing I've heard in my life. When this happened and I had the opportunity to talk to the veteran, we found out there was a couple of things that didn't align very well. The veteran is self-employed. This should be something that's in discovery early in the process when you're doing a pre-approval. Apparently, the lender on the file just issued a pre-qualification letter but masked it as a pre-approval because they thought they could figure it out. When they found out the veteran is self-employed, they didn't know how veteran loans work. They basically just said, hey, we can't do it. But according to the VA guideline, a VA loan doesn't really have a particular debt-to-income ceiling like an FHA or a conventional loan. Lenders have certain discrepancies they can use to figure out ways, as long as it makes sense, to make the loan happen. Now, at the end of it all, of course, the veteran bought the house. We were able to close. It was a lot of stress on all of us because we only had 14 days to do so. But it could have been avoided had the lender known how to do this loan. It's not about me just making money. It's about me serving those who've served the country, and they've earned a great benefit by doing so. So if we wake up in the morning, safe and secure, happy, living our lives the way we do because somebody else out there lost a leg or lost a family or has a difficult life or has asbestos poisoning being on a Navy ship for 20 years, we kind of owe it to them to service them better. This blows my mind. A lot of people don't know how many veterans actually make up clients in our industry. So if you think about this, the US military is one of the largest employers in the nation. What that tells you is there's a lot of qualified buyers you could be working with if you explore this space. Think about it, 700,000 loans were originated in 2022. That's a lot of transactions. Imagine just having 1% or 0.5% of that in your belt to be able to close these loans. Veteran homeownership exceeds the national average by 10%. And the coolest thing is, veterans relocate every couple of years. Sometimes they're active duty, so they have to relocate, which means they're constantly buying homes comparatively to most regular people that are not moving as much. The average stats in Florida for people that buy homes and move are anywhere between 3 years to 7 years. So if you have 2 to 5, you have a lot more clientele. Now, Florida had over 1.49 million veteran residents in 2021. Think about that. And it was $24 billion worth of VA loans were written in 2022. If you take $24 billion, divide that by an average loan size of $400,000, you can come up with a number that's going to blow your mind. Like, wow, that's a lot of people buying homes. Something that's very interesting, and I think for agents, you need to know a little bit of this. 27% of veterans have service-connected disabilities. What this means is that they may be exempt from something called a funding fee. That would be better for them in terms of cost. They may have an additional income source that can be utilized to qualify them. So it will open up your chances to work with these people because they're actually more qualified. You want to ask these 3 questions to any buyer you're working with. Are they or their spouse a veteran? Do they have any disability from the VA? And do they have a COE, which is certification of eligibility, which is an absolutely important part of their loan process. When you ask these questions, you kind of know a little bit. At least when you talk to the lender, you can question them a little more. And I'll dive into that later and why this is important. So these are the 6 biggest myths I've seen around the veteran loan space. One is, oh, you're zero down, you're a weak buyer. Or VA loans are harder to close and get through underwriting. Or they take way longer to close. Or the seller must pay veterans fees, so it's not an acceptable offer for the seller and we'll do another one. Veteran can only do 1 loan at a time. So if they have one house, then unfortunately they can't buy another one. Or the appraisals are tougher. We'll go through these one at a time. It's going to be fun to kind of bust these because these are absolute BS. Think about this. I have 2 buyers. Borrower A has a FICO score of 672. Their median household income is $68,000, and the average loan amount for them is $232, which is pretty much an FHA buyer based on recent statistics. A borrower B, who's a veteran, has a median score of 736, a household income of, let's say, 90 grand, and average loan size is higher. One thing that's very important that most people don't know is most people in the military, if they do not maintain a good credit score in certain ranks, their credentials are revoked. And they have to maintain a good credit score because it shows discipline in the ability to pay your bills on time. So that's a pretty big differing factor. Veterans generally have a much higher qualifying factor compared to FHA buyers. When somebody says zero down is a weak buyer, if you have a 720 credit score compared to, let's say, 650, that's not weak. And if you have liquid assets that are higher, because obviously you're making more money and you have other sources of income, like you have combat pay, you have housing allowance, you have clothing allowance, all these things are included, which basically increase your pay so you have more money to save. Most of them have bachelor's degrees. And between the amount of home loans that were availed plus the active duty benefits they have more money in their pocket. So you could have a veteran who has a full-time job. I'll give you an example of a police officer. He has income from the police force. He has a service-connected disability, so he's getting money that was roughly about almost $2,500 extra on top, which he's getting. So his total income was increased by a substantial amount, making him way more qualified. Plus, removing the debt-to-income problem with no ceiling, it was a very easy way to qualify him. But the other lender didn't see that because they didn't know that. So what did they end up doing? Messing up the deal, causing everybody pain. Think about two buyers. One buyer has 5% to put down. The other one says, hey, I'm going to put $0 down because I have a VA benefit. It doesn't mean that the veteran doesn't have any money. They could have money, but they've earned this benefit. So if a veteran has $50,000 cash sitting, they don't want to tell you because they don't need to. You don't need to know that. But they have the ability and have earned the right to put $0 down. If they can use this $50,000 to invest in some other asset where they can make more income, they plan to put $0 down on the house because they don't need to. Does that make them a weak buyer? It doesn't. It makes them a more qualified, more smart buyer who can now leverage themselves to make more money in the long term for their family. But just because they're putting $0 down doesn't make them unqualified. The second one is one that really pisses me off a lot. I've seen a lot of people talk about this. VA loans are harder to close and get through underwriting. Based on what? If you look at the VA circular that's in the handbook 26-7, underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving loan applications for every qualified veteran. What that means is most lenders have the ability to underwrite the VA loan themselves. They don't need to send the loan to the VA to underwrite. What this means is I'll work way harder to help a veteran close on their loan than I would another loan because I know the Veteran Affairs gives us a 25% loan guarantee, which means that if, for example, worst case scenario, a veteran does not pay their mortgage, I'm getting 25% loan guarantee. On a $500,000 house, that's $100,000. So in 2 years, if I get $100,000 on that house plus the equity and I get to short sale that house, as a lender, am I benefiting? Sure. What's a FHA and conventional doing? It's charging mortgage insurance. And if you all know how insurance works, it's a premium. I'm not guaranteed that I'm going to get paid my payout from the insurance company. I don't know when it's going to get paid out. I don't know what's going to happen. So I'm way more comfortable doing a VA loan because I will get compensated 25% regardless. Also, they've made it way easier for us to ensure that we write these loans with the best of our ability. The performance portfolio, look at that. Like only 1.98% of VA loans go into foreclosure. Conventional, 2.47%. FHA is 9.1%. It's also a pretty weak myth people have that, oh, VA loans are harder to underwrite. They are not. At this point, it really matters who your lender is and do they understand how the VA loan program works. The easiest thing is the VA lender's handbook. It has all the answers in there. And if that doesn't answer it, we have a phone number anybody can call, by the way. The veteran can call it. I, the lender, can call it. You as an agent, you can call it. It's called the Regional Loan Center. Each state, each area has their own. The reason they have that is so you can pick up the phone and call and say, hey, I have a veteran buyer with X scenario. Could you please help me understand this? And they will do what they need to do to educate you, to help you understand so you can service that veteran. I've heard this so many times now that I'm like, this is so dumb, really. VA loans do not take longer to close. They take relatively the same time it takes a regular conventional loan to close. It's on the lender's ability to understand and qualify the client to make sure they don't do things the wrong way. And even though we're going to get into this later, it's very important to know that a veteran who is trying to use a VA loan obtain their certification of eligibility, because that is the golden ticket. That is what tells us that they will qualify for a VA loan or not. If somebody has been on active duty, but they haven't hit their timing or their mark of service, then they won't qualify for it. If they're a reserve National Guard, they have to have a longer frame. So if they haven't served it enough, it doesn't mean that, oh, they don't qualify today, they'll never qualify. It's our duty to educate them and tell them, hey, if you're thinking about leaving, don't do that yet. If you want to take a VA loan benefit, stay in there for this amount of days or years or months more. So when you do leave, you have the full service in your certification of eligibility when I pull it, so you could buy a house maybe a year, 2 years down the road. But that's something we have to consciously educate people about. So no, it does not take longer. It really depends on the lender themselves, how they work, how they qualify. And most lenders have the AUS, which is automated underwriting system, through which they can run it and figure it out. Plus, as long as they have entitlements on the certification of eligibility, which we'll jump into next, they have the certification, they have the required documents, and the veteran qualifies on the regular guidelines, it should not be an issue closing them in the regular time frame. You have a 1% origination fee that is a flat fee. That's the max a lender can charge. What's included in this? This is the important part. Discount points are not a part of this. What's a part of this is the origination charges. If a lender says that, hey, as a Standard fee, I charge about $1,500 for all my loans, and that's about it. Okay, that's fine. 1%. So let's take a $300,000 loan limit. That means you can still pay up to $3,000 in that 1% origination fee. $1,500 is part of that. If the title company has their fees and they are within that 1% range of $3,000, we're okay. You don't need the seller to pay anything. Plus the home inspection, most inspection companies that do work with veterans, a lot of times they have packages where they include that in there and you can have them pay for it. So it's not a big deal, but there's a workaround. If you run into this situation where you're like, okay, I need to do this and I need to figure this out. If you are working with a veteran, why not start off on the right foot? Talk to the inspection company and say, hey, listen, I am doing a inspection for a veteran buyer. They will need a termite inspection. Absolutely. It's a mandatory thing. You cannot do a VA loan without it. It's an absolute must. Can you build it into your price and just charge it in the home inspection? Maybe raise your price $100 or whatever and include that in there. This way you get the termite inspection. It's already paid for in the home inspection, which is not a part of our origination fee. And guess what? Everybody's happy. Now, all you have to do is get it signed by the buyer and seller, and that's good. There are ways to get around things. You just have to know who you're working with and who you're talking to. So we find solutions, not point out problems and everybody's blaming each other. If me as a lender, let's say, for example, I have a minimum loan limit for my office where I cannot do loans under $150,000, and you have a client who's doing a loan amount of $150,000. Now this 1% origination fee becomes a problem because my minimum charges are $1,500. So I'm exceeding the limit. Now I'm making everybody else pay for all these other fees like title fees and all that stuff. Maybe I'm not the right lender. So if I know that going in, I could tell you, hey, a realtor, man, listen, I can't do this, but I do have a friend who works in a different office where they're able to do this. So that's a lender problem. It's not a VA problem. It's not a veteran problem. That's a lender problem. So we as professionals should take the understanding to know what we should be asking, who we should be asking, and why we should be asking this. So at the end of the day, the client is not the one suffering because we all collectively here took certain responsibilities in our ethics, in our business. And our goal was to do what? Service the community by helping them achieve the best financial future with homeownership. So if we can't even do this and understand what our compliance departments, what our lending guidelines are, and that's kind of shame on us at that point. The discount points, they're not part of the 1% origination charge. So if a veteran wants to pay 2% discount points, it's not going to be counted towards that. I'm going to drop one cool thing that I don't think a lot of people know, but let's say a veteran can do zero down. They don't have enough money for closing costs. Guess who can give them gifts? Everybody. Anybody can gift a veteran. There's no problems. It's not like a conventional FHA loan. They can actually go take out an unsecured loan for themselves, only for veteran loans, by the way. And they can use that money to pay for their closing costs if they have to. And I just have to count that in their debt to income ratio, which is pretty awesome. This is one of my favorite ones that you can only have one VA loan at a time. It's really a question of three things: eligibility, entitlement, and qualifications. Without these three, there is no such thing as a VA loan. So what is an eligibility? Let's say you are a Vietnam vet and you've served your time, and based on your time frame, you have an entitlement, which is going to be on a document called your certification of eligibility. Once you have that, you're entitled. Now, once you're entitled, you still have to qualify with the lender you're working with. And this is where the lenders come into play. According to VA Lender's Handbook, there is no minimum credit score for a veteran to qualify for a loan. What it is a lender's overlay. So if I work for a specific lender and we cannot do veteran loans under 580 credit score, that's not the VA's guidelines, that's my lending institution's guideline based on our investor overlays. If we can find somebody who could do it less than that, sure, they could still work with them. There's no minimum credit score. It doesn't. So if somebody says, hey, you have a VA client and their credit score is 600, we can't do it. Okay, well, it's not that the client doesn't qualify. Obviously, it's the lender. But as a responsible person, you also have to understand that, okay, would it benefit them in this environment today to have a 600 credit score and buy a house? Even though VA loans are about 0.5% better in interest rate, would it still benefit them to pay 8% or 7.5% interest rate with 600, where if their credit score was 700, they would benefit? Now, this is where your lender partner comes into play. So if I look at a credit report and I, let's say, do a soft credit pull on a client, and I'm like, hey, you know what, Mr. Veteran, I think if you pay off these 3 credit cards and if you remove this collection or if you do this, from 600, you can actually potentially go to 720. And the difference between that from your interest rate would make a difference from 7.5 to maybe 7% or 6.8. Plus the discount points you're going to pay to buy that rate would drop by $3,000. Would that be beneficial? Sure. Okay. How long do we need to do that? Maybe 30 days? So why don't we discuss these things in advance before going and looking at houses So we know responsibly we're actually helping someone. Because if they're going to pay an 8% rate, that's going to eat up their purchase price versus 6.8. So that's going to open up way more qualification for them to be able to buy a much better house with a much better payment instead of paying lender fees and interest rate on a lower quality house. I'm kind of frustrated to say this, but I think a lot of lenders don't take time to learn. They do something that is very unethical by saying, hey, just here's your pre-approval letter, we'll figure it out. And you don't get the COE. So looking at the certification of eligibility. Now there's a couple of things here. You'll see the entitlement code, which is going to tell us what branch of service they were in, which is also listed there. And the funding fee, is it exempt or is it not? When you study the VA loan, it says, oh, veterans can have a loan amount up to $144,000 and the entitlement for that is $36,000. There's two types of entitlements. One is the regular entitlement and one is a bonus entitlement. Without this document, I cannot do a VA loan because there's no proof to know that they qualify for a VA loan. And the loan is not guaranteed. So now, if I run into this situation, as a lender, I have to inform the veteran that, hey, for whatever reason, you don't have a certification of eligibility. And if you do, it doesn't say you're entitled to a VA loan. So either we have to figure out why it says that. You can talk to the Veteran Affairs and figure that part out. Or let's go to a different loan program. But without doing this, it's an absolute disservice to tell somebody that they don't qualify for a VA loan. You can only have one VA loan at a time. That's absolutely not true. Absolutely not true. You can have multiple VA loans because everybody knows here, I hope, that a VA loan is an assumable loan. So if you assume a VA loan, but you're not a veteran, you're not taking over the entitlement, and it's just a regular person who's assuming this loan, then the veteran still is responsible for that loan in terms of their entitlement. So it's not taken out. So it doesn't mean they cannot buy another house. What it simply means is that their entitlement level is low. So they may be restricted to using up their entitlement completely. But even then, it's not a problem. So if they have entitlement left to an X amount of dollars, and to buy this house, they need to come out of pocket, they may just have to pay an additional $3,000, $4,000, but they could still use their benefit. So it doesn't take them out of the benefit. So they could still get the VA loan with no insurance, mortgage insurance, still get a better interest rate. So that's something that gets missed all the time. Now, if you foreclose on a VA loan, you can never get another one. Absolute BS. If you were foreclosed upon and you had a house for $144,000, your only entitlement charge is $36,000. So you still have your bonus entitlement, which means that as a lender, when I look at it and I calculate what entitlement they have left, they'll have a limited amount that they can go zero down on the house, but they can still buy another house. It doesn't stop them from buying another house. And it also goes into play where if you're buying two houses. So if you're stationed in Florida and you've been living here for a couple of years, but now you're going to go to Texas and you have to buy a house there, you can buy a house. Same thing comes into play. Whatever entitlement you have left, you can use to buy that house over there. Now, one thing to remember is this is not an investment product. It's only for primary residence, but it has to make sense to the VA to be okay with it. So you can't trick them by trying to build a rental empire. That's not going to work. But you can absolutely rent the house that you bought as a primary residence because you had it initially in Florida. You can rent that out, but you can't buy it intentionally to rent it out. I went to one of my friends a week ago, and they had a veteran who is getting divorced. So he's buying a house next to the house where his wife and kids live. Now, in this case, the Veterans Affairs allowed that because they understand that this person wants to live close to his family, but not in the same house because they're getting divorced. So he bought the house next door, the neighbor's house. Now, in a regular circumstance without a divorce decree, that would not be okay because you can't just buy your neighbor's house just because it's the same exact thing and you're building a rental empire. But in this scenario, it worked. So there are certain stipulations, of course, and this is where you have to know who you're talking to and how much they know. And if they don't, it's okay. They can pick up the phone and talk to the regional loan center and find out. So it's really not that difficult as much as people think VA loans are. The last one, I don't know where this came from and who spread this or who started this, but there is no maximum loan amount for a VA loan. It depends on how the lender can go. So it's really a lender-based thing. So if a lender says, oh, we cannot do a VA loan more than $500,000, that's a lender problem, not the VA problem. So find somebody who can. So when you see a listing that says $700,000 purchase price, cash and conventional, and does not say VA, talk to the agent and ask him, hey, is there a reason why it does not say VA on there? Because, the veterans can buy it. There's no loan limit on veterans. It's whatever the lender's limit or the county limit is for that area. So that's a very important thing to know, because you could be potentially missing out on a good deal if you're on the listing side of things or on the buyer side of things, where you're limiting yourself, not showing the veteran homes that they can actually afford. So you have two entitlements like I talked about. Now, in the old days, when home values were 144, 100,000, that's when the first rule came into play, that you can buy a property up to 144,000, and if you do, your entitlement that you're going to get is $36,000 from the VA. So that's what they're going to guarantee me as a lender to pay me back if they default, which is 25% of 144,000. When the purchase prices went up, what happened is they came up and updated the rule and said, okay, we're going to guarantee 25% of the purchase price. So whatever that is, we're okay with it. But there's no county loan limit to any of that. So they can go zero down and buy this house, and that's just how this works. But the entitlement calculations are very specific, and we have calculators to do so. So if you run into a situation like this, it's very important to talk to a lender and say, hey, can you calculate and see what their entitlement level is to how much they can buy zero down, and if they need some money out of pocket. Because if they can't go zero down on their next house, it doesn't mean they can't buy the house. It just means they can just put a little bit of money and make it work. It's the lender's responsibility to calculate that and inform the veteran. And all this starts by first getting the certification of eligibility. So one thing to remember right now in the middle here is, if you ever work with a veteran and you know they're a veteran, the first thing you want to do is have the lender get a certification of eligibility. It really doesn't take that long. It's a very quick thing. If they have a DD-214 or NGB-22, NGB-23 are documents that show their eligibility. Now, 40-50% of the time I can get this within 30 seconds because they have records that are updated. Worst case scenario, it could take 4 or 5 days. But I've never seen one that took more than a week to come back. If they don't even have their documents, we could still work around it with their social security and their birth date. Sometimes that doesn't work because the Veterans Affairs doesn't have all their documents. So I need to send in a physical copy of a DD-214 to get it. But this stuff should be done in advance, because if there is no COE, there is no VA loan. As a real estate agent, I think it'd be very important for you to have that conversation with your lender to know if they do VA loans. If somebody says, yeah, we do VA loans. Yeah, but do you know how to do them? Your lender does them. It doesn't mean you know how to do them. It's two very different things. This is the foreclosure. So if you notice here, it says $72,930 loan amount and 1997. And entitlement charged was $29,172. So if I take $144,000 and remove $29,172, that leaves me with a balance of roughly, I think, $101,000 in entitlement. That would mean that I could still potentially buy a house for around $400,000 with zero down, even though I have this. So my entitlement is restricted. And if I want to buy a more expensive house, just put the money down in difference. That's all it means. It doesn't mean that, oh, I can't buy a house because I have a foreclosure from 1997. This is, again, one of those conversation pieces that you want to engage with the right team to understand how can we service these people better. So when you hear this part where somebody says, hey, they're buying a $500,000 house and 25% of that is $100,000, so the veteran needs to come up with $100,000. They don't need to come up with $100,000. The $100,000 is the guarantee that they're getting from the Veterans Affairs. That's not what they need to pay. Their amount out of pocket is going to be something I will calculate based on their COE, what that says. So again, it's not going to be $100,000. So don't let anybody fool you into believing this. And if a lender says that, then ask them, did you calculate this based on their certification of eligibility? And it's absolutely okay to ask that. Even if you don't know all of what it means, you know the basic. Because what this shows is, okay, this person doesn't specialize in VA loans. Maybe it's a good time to engage somebody else who does know how this works. So you don't put your veteran through, yourself through, the listing agent through, the seller through painful experiences simply because somebody dropped the ball. The last one is one of my favorites, because I feel like this is so misunderstood for a lot of people. And I don't know if a lot of people know about this, but VA loan appraisals are not tougher. Actually, believe it or not, way easier to work with, because we could still have certain influences to change property valuations. There's two things in there. There is a Tidewater process and reconsideration of value. The Tidewater Act basically means that a VA appraiser went out, appraised the property, and when they came back, the property was not valued as to what you are listing it for. So what happens next? The appraiser will send out something called a Tidewater Act email to me, the lender, and say, hey, Mr. Lender, your purchase price that you've listed does not match my numbers. So you have 48 hours to provide me 3 comps that defend the value of the purchase price. Now, me as the lender will have to send this to the listing agent and say, hey, Mr. Listing Agent, could you please fill this grid with the 3 properties that you think are the closest to support the price you have listed on your purchase. And as soon as I get that back, I give it back to the appraiser. They reconsider it, and if those properties make sense, they will increase the value of the home. Now, the next part is the reconsideration of value. Reconsideration of value basically means if the property comes back lower than the appraised value, the veteran still has the option to say, hey, I don't think the valuation is correct because of this reason. And we have to prove to the appraiser why that is. And look, appraisers make mistakes just like me, just like you. They're people, they're not perfect. They can make a mistake. So if an appraiser forgets to include something of value that's a swimming pool or a master bedroom or some part of the house that they may have missed for whatever reason, if you can provide actual proof that, hey, look, you may have missed this, but based on this, the value actually is supported, we can tell them to reconsider their valuation. And if what we're providing makes sense, they will do it. And it doesn't mean that if the value comes in lower, the veteran can't buy it. They can still cover the appraisal gap. This is where the 0% down is such a beautiful thing. If you have a veteran who has money, but they don't want to use it, there's an appraisal gap of a few $1,000s, they can cover that out of pocket. If you had a conventional buyer who's already putting a down payment, closing cost, and now has to come up with an appraisal gap, think about that. They have to come up with 3 things. A veteran buyer does not have to come up with 3 things. They have to come up with less. So it's pretty cool how this works. And the cool thing about this is the appraisal does not stick with the property, okay? It goes with the veteran. So if I'm a veteran and I do a appraisal on a specific property, now that appraisal is not tied to that property. You can have somebody else come in, do another appraisal, and that would be totally different. So if you're a listing agent and you're like, oh my God, if this appraisal comes in and it's gonna, tie my property up for 6 months, not gonna happen. Minimum property requirements. This is something everybody brings up all the time. Like, oh my God, it needs to be a perfect property. It doesn't need to be perfect, man. It just needs to be safe, sound, and sanitary. If you have some paint missing in a corner somewhere, just paint it, just fix it. If there's a bathroom with a GFI unit that's broken, it's a few dollars, just fix it. Like, it's little things. It has to be clean, sanitary. You can't have a bedroom, master bedroom with cat pee all over it. You can't have that. So would you want to live in a house like that? No, you wouldn't. So why not take care of that? So if these are little things you're worried about, fix them. It's just an ethical thing to do with it. It's not something very difficult. But that's kind of what the veteran appraiser is looking at. They're not looking to destroy your sale. They're just trying to make sure the veteran is able to live in a house that's safe, that's sound, and that's sanitary. It's way easier than an FHA loan. You have to have a couple of things, of course. Lead-based paint, you can have the disclosure, your roof, your heating, high voltage electric lines, the basic things that most agents know. Cool hack here is if you are doing a property inspection and you are not sure before you get to an appraisal and you have, let's say, a 7-day inspection period and you get the report within 24 hours, it's totally cool to send your lender the report and say, hey man, can you review this and make sure everything's okay? So that way we can talk to the listing agent before we do the appraisal so it doesn't cost the veteran more money and more heartache and more pain and be annoying. Why don't you look at it with me and tell me if I need to get something fixed now and I could talk to the listing agent and give them some time so they can take care of it so when the appraiser goes out, everything's cool. Doesn't that make sense? The thing is, why aren't we doing that? Because nobody's thinking outside the box. Nobody's thinking, let's find a solution. Everybody's thinking, oh, let me just do the least amount of work and put that on the other person. That's where things start to become a problem. Also, it's very important to have the right title company, by the way, because a lot of title companies don't know how VA loans work. You don't want to be in a situation where they miss something that they were supposed to do. And on the day of closing, you're sitting there, everybody's excited, happy to exchange keys, and now you can't do something because somebody missed something somewhere. I know everybody loves their title companies, but if you have a specific transaction, then let them know, hey, I'm working with a veteran. Have you done these before? Okay. Are you cool? Okay. Do you understand it? Okay. If you don't, it's okay. I'll just work with somebody else this time, but I want to make sure my client is serviced better and they'll understand. So please talk to people that know what they're doing instead of just taking the easy way out. Cosmetic work is not a minimum property requirement. Updating is not. So if bathroom is outdated, it's not a minimum property requirement. Yard work is not. So big grass growing in the backyard, a couple of weeds, that's not going to inhibit the appraiser from giving you the valuation you need. These are little things that sometimes we freak ourselves out with on our own, which really are not that necessary. Inspection report, share that with your lender. Tell them, can you please go through this? Make sure, let me know so I'm safe. That's where we team up. So you have to know who you're working with. And that's where all this comes into play. Going through this, pretty much all these myths are total BS. And if these were ever a reason why you were not able to service a veteran, please, you may want to call them back, or at least now you're armed to make those decisions better. And this is just something for you personally to know. You don't have to have this conversation, but it's just a helpful thing to know, because you may talk to somebody who may say, yeah, I've been in the military for X amount of years. Is this branch or spouse of a veteran who was POW or MIA? By the way, at a certain age, they qualify. So if you're a spouse of a veteran who was MIA or KIA, you can actually get their entitlement after a certain age if you're not married. So if somebody says, yeah, man, I've been in the military for about 5 years. Okay, were you active? Were you inactive? What were you doing? Okay, cool. It will open up not only a conversation piece for you so you can learn more about them, build more rapport, because they'll appreciate you knowing this. But at the same time, you can call the lender and say, hey, my client is in the branch of the Army. They've been in the military for 6 years, and they, based on what they're saying, they have 90 days of continuous service or 60 days of continuous service. Or I have a National Guard member who's been in the selected reserves for about 4 years. Can they qualify? No, they need 6 years. Okay, all right, cool, no problem. But at least it's an easy conversation to know. It pertains more to me as a lender, but I think when you're qualifying a client based on your part of the process, you can always ask them that, hey, if you're going to apply for a VA loan, it's important you have a couple of documents in order. Are you currently active? Are you retired? Okay, well, if you're active duty, do you have DD 214? If you're retired, same thing. If you're National Guard, they don't get DD 214. They get NGB 22 and 23. So if they're in reserves, they get statement of service. So these are things that we don't want to send them around the wrong path, because if you tell somebody who's in the National Guard, hey, can you get a DD 214? They're not going to have one. They're going to be searching the National Federal Archives for weeks and they're not going to find it. It's just going to be a waste of everybody's time. This way, at least you can get them to start looking through paperwork. You know, they get multiple DD 214s of different times they serve. So we need the latest one, not the oldest one. That will tell me what's their latest eligibility. And the last thing here is when you're providing a offer, if I get a veteran client, I will read the contract and call the listing agent and the title company and talk to them so we can get things correctly ordered. Because if I'm going to order a title package or get title fees or a pre-CD, I need to tell the title company, hey, this is a VA loan, by the way. So I need you to send me your pre-CD right away with the updated fees so everything is okay. The next thing, if I don't get a chance to write them a letter and an email, I can just call them and explain to them, hey, look, everything is good. Everything is here. This veteran is extremely well qualified. We can close in 20, 21, 25 days, whatever the case may be. So do not worry. Rest assured, we got this going. These things are important. If your partners are not doing this, you may want to either educate them and tell them, hey, look, take a look at this presentation. Can you do this? Specializing in VA loans, you don't want to do them, then let me know in advance. So I'm not putting my client through any stress and not putting you through stress. You can't learn this product in 2 days unless you spend so much time learning, understanding how it works, because every lender has completely different guidelines. Something I think I have to add at the end is if a veteran gives you a COE from 20 years ago, I can't use that. I have to use the latest one. Because if they bought a house with that COE 20 years ago, it's not going to say all the information I need to look at. I can't use it. If they are in different states, based on their disabilities, they can get exemptions. And there are percentages. Of course, I don't memorize them by heart, by mind, but I have them listed in my computer. So if I look at that, I can know if a veteran will be exempt from paying taxes. And of course, that they have to apply for later. Even if they are getting an exemption from the funding fee, that's something that can be refunded later on. So it doesn't mean that if they're going to get exempt in 6 months from a funding fee because of whatever disability they got approved through the VA, that now they're buying a house and they're going to wait 6 months because they're like, oh, I'm going to wait till my funding fee is waived. You don't have to make them wait. We can refund that. Get them pre-approved, let them buy the house, and then 6 months later when they have that disability letter, just give it back to the lender and say, hey, here you go. It really depends on who you're working with and are they trying to serve the client or are they just trying to make a commission? The VA Regional Loan Center, each state, each office, each area has their own. So if you are a veteran yourself looking to buy a home for yourself, press number 1. If you're a lender or realtor, press number 2. They will direct you and answer any question. So anytime you have a scenario, and if you have old ones, I would encourage you, call them and ask them. They're very helpful, very knowledgeable. Even me sometimes when I'm in a position where, as we all know, each transaction is very unique to itself, I call them because I'm like scratching my head. I'm like, I don't know how to solve this, but I'm not alone. I have a team of people willing to help me do this. Become the authority, guys. Become the people who are out there to serve clients, do better than everybody else.